The story of the internet begins long before the buzzing modems and glowing screens of the 1990s. It starts in the tense, strategic atmosphere of the Cold War, when the United States sought new ways to safeguard communication networks against potential Soviet attacks. In that environment of fear and innovation, government researchers began imagining a system that could send information along many paths so no single attack could knock it out. In the early 1960s, the U.S. Department of Defense created the Advanced Research Projects Agency, known as ARPA, to push scientific boundaries. ARPA scientists were exploring a radical idea, a method of breaking information into packets that could travel separately and be reassembled later. This idea, called packet switching, became one of the core foundations of the internet. Leading thinkers like Paul Barron, Donald Davies, and Leonard Kleinrach each contributed theories that would transform communication. They realized that decentralizing the flow of data would allow a network to survive disruptions. Instead of sending information along a single, dedicated path, the network would choose the best available route dynamically. By 1969, ARPA's vision began to materialize into a real working system called ARPANET. For major universities UCLA, Stanford, UCSB, and the University of Utah became the first nodes in this experimental network. For the first time, computers were talking to each other over long distances in a way that no human had ever seen before. The first message sent over ARPANET was meant to be the word login, but the system crashed after sending only 2 letters, LO. Even so, that tiny, accidental message became symbolic. The world had been welcomed with an unexpected LO to the age of digital communication. As ARPANET expanded in the 1970s, more universities and research institutions joined the network. Scientists loved the rapid sharing of information, and collaboration suddenly became easier than ever. Yet few outside academia imagined the technology would one day underpin the global economy. Meanwhile, researchers Vint Cerf and Bob Kahn were developing a universal language that all networks could use to communicate seamlessly. Their project led to the creation of TCP/IP, the protocols that still run the internet today. In 1983, TCP/IP became the standard that united all ARPANET nodes. That same year, ARPANET officially split into 2 parts, ARPANET for academic research and MILNET for military communication. Though it remained obscure to the public, the foundations of today's online world were now firmly in place. As computing technology advanced in the 1980s, more governments, corporations, and universities adopted network systems. Still, something was missing. A way for ordinary people to connect information through an intuitive interface. That missing piece would soon come from an unexpected place. In 1989, British computer scientist Tim Berners-Lee proposed an idea at CERN, the World Wide Web. It would use hyperlinks, web pages, a universal addressing system to allow users to navigate information like walking through a digital library. His invention transformed the internet from a technical network into a human-friendly universe. In 1991, the World Wide Web went public, and researchers and hobbyists began creating some of the first websites. The experience was basic by modern standards, but for the first time, individuals, not just institutions, could participate directly in the online world. Soon after, companies realized that the web could reshape business itself. By the mid-1990s, thousands of startups emerged, each promising to revolutionize shopping, communication, or finance. Investors saw gold in the digital frontier, and money began flowing into tech like never before. This rapid influx of investment launched the internet into a new phase: commercialization. Advertising, e-commerce, email services, and online marketplaces exploded. Entrepreneurs believed that the web was the future, and the excitement fed into a growing economic boom. The financial world took notice. Venture capitalists, always hungry for the next big opportunity, poured billions into internet startups. They believed that any company with a .com in its name was destined for greatness. For a time, it looked as though they might be right. Companies like Amazon, founded in 1994, and eBay, created in 1995, demonstrated that the internet could host real, profitable business models. Their early success strengthened the belief that online commerce would dominate the future economy. Meanwhile, internet service providers began rapidly expanding, offering millions of households access to the digital world. Cable companies, phone lines, and satellite networks created the infrastructure that would connect entire nations. The stock market responded with explosive enthusiasm. The Nasdaq home to tech stocks skyrocketed, rising faster than any index in history. Investors saw internet companies as the new industrial revolution, a technological gold rush. But beneath the excitement, cracks were beginning to form. Many companies lacked real business plans. They burned millions of dollars without generating revenue. Some spent more on advertising than they made in sales. The bubble was growing, and few knew it was about to burst. In 2000, the dot-com bubble finally collapsed. Stocks plummeted, fortunes evaporated, and thousands of startups went bankrupt almost overnight. It was one of the most dramatic market crashes in modern history. The financial fallout was enormous. Investors lost trillions. Workers lost jobs, and confidence in the tech sector crumbled. Critics declared the internet a fad, predicting that most online businesses would never recover. Yet beneath the ruins of the bubble, something remarkable endured. The infrastructure, protocols, and ideas powering the internet were still strong. While many companies failed, the core technology remained transformative. Slowly but steadily, the internet began to rebuild. Survivors like Amazon, Google, and eBay refined their business strategies, focusing on long-term growth rather than hype. Their resilience proved that the internet economy had real staying power. Governments also realized the importance of digital infrastructure. They invested in broadband networks, fiber optics, and wireless technology. The world was preparing for a much more connected future. By the mid-2000s, social media platforms emerged, beginning with MySpace and Facebook. These sites transformed the internet into a social ecosystem, drawing billions of users into daily online interactions. This new era created entirely new revenue streams: digital advertising, data collection, and influencer marketing. Companies learned how to monetize attention itself, turning human behavior into a profitable resource. Mobile technology soon accelerated everything further. With the release of smartphones, the internet moved from desktops to pockets. Now people were connected every minute of the day, expanding online commerce into a round-the-clock economy. The financial effects were enormous. Entire industries, retail, entertainment, travel, banking shifted their operations online. Brick-and-mortar stores struggled, while e-commerce giants rose to unprecedented power. Despite these concerns, the digital economy continued expanding. Cloud computing emerged as a central pillar of modern business, allowing companies to outsource data storage and computing power at a fraction of previous costs. This lowered barriers for startups worldwide. It's the gig economy, powered by internet platforms like Uber, Lyft, Fiverr, and DoorDash, reshaped labor markets. It created flexible income opportunities but also sparked debates over job security, labor rights, and financial stability. E-commerce exploded globally, with companies like Alibaba transforming shopping into a digital experience. Retailers who adapted thrived, those who didn't often collapsed, contributing to the decline of traditional brick-and-mortar stores. On the darker side, cybercrime emerged as a major threat. Hackers targeted banks, governments, and individuals, creating billions of dollars in losses. The financial risk of identity theft, ransomware, and data breaches became a permanent part of the digital landscape. Cryptocurrencies appeared in 2009 with the introduction of Bitcoin. Built on blockchain technology, they promised decentralized finance, challenging traditional banking systems. Investors flocked in, causing dramatic price swings and widespread speculation. The financial impact of crypto extended beyond trading. Entire industries emerged around mining, exchanges, NFTs, and decentralized finance DeFi. Some saw fortunes rise, others lost everything in collapses like MT-Gox and various crypto scams. Meanwhile, developing nations leveraged the internet to access global markets. Remote work opportunities, digital education, and online entrepreneurship created new avenues for economic mobility in regions once isolated from global commerce. The internet also revolutionized communication costs. Long-distance phone calls, once notoriously expensive, became nearly free through VoIP and messaging platforms. This shift saved consumers billions and restructured telecommunications industries globally. Traditional media faced financial disruption as audiences migrated online. Newspapers, magazines, and broadcast television struggled to adapt, forcing many into digital-first models or bankruptcy. Yet new content creators from YouTubers to podcasters flourished. The digital advertising economy ballooned, funding free online services but raising ethical questions about privacy. User data became a commodity, and companies monetized it at unprecedented scale, sparking intense regulatory debates. During the late 2010s and early 2020s, the internet solidified itself as the backbone of global finance. Stock trading moved online. Financial analytics became real-time. Fintech companies disrupted banking, with mobile payments and peer-to-peer lending. The COVID-19 pandemic accelerated these changes. Lockdowns pushed education, business, entertainment, and shopping online at unprecedented levels. The internet became not just an option, but a lifeline, proving its unmatched economic significance. Yet with all its benefits, accessibility, opportunity. Innovation in the internet also introduced vulnerabilities, digital inequality, misinformation, economic volatility, and dependency on systems that can collapse with a single cyber attack. Today, the internet stands as one of humanity's greatest inventions, a product of scientific curiosity and geopolitical tension that evolved into the core of global economics. Its financial effects, both uplifting and destructive, reflect the dual nature of all powerful technologies. As society continues integrating the digital world into daily life, the story of the internet remains unfinished, with its next chapter still being written.